Today is our very first episode podcast. I'm here, Vince Lee, GTA Real Estate. That's my YouTube channel. Here with my good buddy, Fred Lam. And the purpose of today's episode is to really discuss about his journey in real estate and how he went from buying his first house to now being a global investor. And he specializes in international student education as his background, helping those find pathways to success through education and specializing in cradle to career guidance. And with him, he brings 20 years of experience in real estate investing across major Canadian markets like Toronto and Vancouver, but also internationally in big cities in Hong Kong and Shenzhen. So, Fred, I just wanted to quickly have you introduce yourself if you wanted to add on to that.
Yeah, no, absolutely. Vince, thank you for having me today, and it's a pleasure to be speaking with you today. And cheers. I'm just reminiscing right now. We met back in Vancouver at a manufacturing facility. How many years ago was that now?
It's got to be at least
Like what, 8 years now?
8 years plus,
Yeah, 8 years now. Wow. I mean, how time flies, right?
Yep.
The journeys and places we've moved to, the cities we've lived in, and just trying to experience it all. At the same time, trying to have that investor mindset, especially when it comes to real estate. We'll be speaking about what the thought processes were, and as an individual with a family, how do you build up, your portfolio? What not to do, what to do. What are the certain economic outlooks that we're facing right now in terms of the real estate market? Should you be pushing your cash into the real estate market at this point? It's a lot of economics. Today's podcast is going to be filled with a lot of information and at the same time a lot of opinion. So I'd say take our advice and everything that we say here with a grain of salt. I guess everything we say is going to be just based on our personal experiences and what our situations ended up being. So with that being said, I'm going to pass this back to Vince real quick.
Awesome. Thanks for that, Fred. So let's just jump right into it. So Fred, just wanted to first start off by asking, what got you into real estate in the first place? And do you remember your very first property? And did you plan to invest internationally when you started?
Yeah, absolutely. So I remember vividly as to why I got into the real estate game in the first place was number one, I was living in China at the time. I was in my early 20s. I started making paychecks, right out of college. I started, the first time in my life I had a little bit of cash on myself, right? And, at the time I was thinking about hey, I have this money now. Should I get a Porsche? Should I get a nice suit? Shall I go on a vacation? But, I was very fortunate, very lucky, to have a great support system. My parents taught me the ways of investing, and they always taught me to be frugal with your money, right? Ultimately, one of the life lessons I've learned, through my experiences is let your money work for you, right? Invest in things that will give you long-term returns. Obviously, a lot of people are looking for passive income, right? And at that moment in my early 20s, instead of getting those items where I might have gotten instant gratification from, I had to train myself to have that mindset of putting my money away to wait for that long-term return on the investments and whatnot. So I think it's really important, especially if you're in your 20s and when you're starting out. It's just like a lot of financial advisors would tell you, start putting away money towards your retirement savings. Buy a fund, right? Real estate is certainly a different path to take. But as a shrewd and mindful investor, it's always important to be aware of what the economic situation is right now in terms of how's the real estate market doing versus how the hedge fund market is doing, how are stocks doing at the same time. I'm not advocating that property is the be all end all of investing. But at the same time, that was my story. And, as everyone knows, we go through economic cycles, right? So I was very fortunate in China in the 2000s. That was when China was at the near top end of that boom in the early 2000s moving into 2010s, right?
Well, that's pretty awesome. You have definitely a lot more exposure than I think most Canadians here. And just wanted to move on to the next question on how you were able to scale up and going from just one property and then to multiple.
Right.
And did you feel confident enough to invest overseas, starting in Hong Kong and then Canada? And did you find that this was a big mind shift as you grew up?
I never really had that type of hesitancy to be investing in Hong Kong because number one, I did grow up there. I grew up there throughout high school. I was there, elementary school. So, I had friends there. I had, summer jobs there, internships and whatnot. So I was really ingrained in that type of society. So I did understand the ins and outs. On top of that, my parents were also real estate investors as well back in Hong Kong. And, I saw, when I was very young, growing up, I saw the trials and tribulations of what it means to be owning a apartment or like a home in Hong Kong, which is, by the way, one of the most expensive cities in the world, even more expensive than New York City. The bills that had to be paid, the mortgages, the strategic use of your cash flow and things like that. So to answer the question, I never really had like that type of a hesitancy or like to, invest and whatnot at a very early age. We did immigrate to Canada when I was very young. So, from a very young age, we started, investing internationally as well. And back in the day, in the 80s, when I was just a boy, the real estate market here was pretty much very stagnant in the 80s, right? But at the same time, it was another way where you would invest into Canada. You knew your money was stable here. You knew you had less stability. You knew you had that governance here in Canada to allow investors to have that peace of mind if they're going to be parking their money here overseas, right? So my perspective is the first taste of international investing was Hong Kong into Canada.
Okay.
But there's a lot of lessons I've learned.
Is it still stable, you think, in this current
So,
situation?
so that's a very good question. That opens up another mindset that when we're sitting at home, kitchen table conversation, you need to understand the reason as to why you are purchasing your property in the first place, right? There's many reasons why people buy property, mainly two. Number one is you're going to be living it in yourself,
Yep.
and then you're going to start raising a family, and then you get a great school district, as we are in right now. Number two is investing, right? So purchasing a property for yourself consumption is certainly a different mindset than as it is to be investing and expecting a return from something, right? So it's really important. One of the life lessons are you do things for the reasons that you set off to do, and then just make sure you don't allow that to morph into something different during the process. That's one of the greatest pitfalls I see when it comes to investing. So yeah, just make sure you understand the reasons as to why you're doing something and such a big chunk of money going to investing. So
Definitely a good point there.
hmm
And so what would you say is kind of like the key differences you notice between like the domestic and international markets investing, like when it comes to regulations, strategies, and what are kind of one or the two challenges you face abroad when trying to navigate the markets? And markets are you currently in now? And do you have any reasons for being in it?
Yeah, absolutely. So one of the biggest things as a person that invests internationally is like your tax position, right?
Okay.
So you need to understand like what the regulations are surrounding your income taxes, capital gains tax. Here in Canada, obviously there is a capital gains tax, but there are certain countries in the world that don't have it, right? And just understanding like depreciation means different things in different parts of the world. For example, here in Canada, most of the townhouses, the one we're in right now is made from wood, right? So every 10 years or so, you need to like put some money towards like the restoration or like maintenance. Every 5 to 10 years, you got to replace a roof and things like that. But if you're buying like an apartment in Toronto, then you don't have those considerations, right? Right. In Hong Kong, most of the housing is apartments, right? So it's all concrete. Stuff there is built to withstand like humidity, for example, right? So there's different environments, different regulations, different types of governance in different countries. And I'm just going to add in China, purchasing a property because it has such a different governance system than Canada, then you may be in for surprises if you're not in the know, right? So, lessons learned are that it's really important to have a great accountant wherever you are that understands international tax treaties, laws, and things like that. Understanding what your investment's going to yield and what type of expenditure that you have, right? So throughout this podcast, the next questions are going to be, talking about cash flow and whatnot. So cash flow always like plays an important part as well in your international investing as well. So, the plan was to invest internationally as organic for me, because for me, my reasoning was to actually purchase a property that I would be living in and not necessarily getting those properties for passive income or just to flip those properties, right? So I think in the developed world right now, most of the tactics and strategies that were used in the 2000s and the 90s don't hold true today. Back in the day, people would used to hold property for half a year and then flip it. It would be a fixer upper, throw in 200-300 bucks worth of paint, then try to flip it for 10, 20, 30 grand extra. That doesn't hold true today, right? Because you have, especially in Canada, you've got regulations in place where if you do sell your property within a certain amount of time, then you're going to get double taxed, right?
So you don't have anything like that similar kind of regulation in China, would you say?
There are regulations like that also in Hong Kong, Shenzhen, China. You're not allowed to flip your part. It's different from China, Hong Kong, different major cities. It depends on the locality as well. So I see a lot of pitfalls where condo investors, they're trying to, make that quick flip, slap on a fresh coat of paint and try to sell it for 50, 60K more. That just simply doesn't hold true nowadays. No.
Interesting. A lot of good little background knowledge there. What are kind of some of the lessons and advice you can share? Like what are some of the biggest mistakes that you've made and kind of what you learned from that? And what would you wish that you knew earlier? And do you have any advice for listeners who want to invest internationally right now?
Yeah, sure. So some of the lessons were, once I remember working in China, my bonus at the end of the year was commission based, right? So one of the greatest challenges I had during my investing journey in property was, once you get the money, you're itchy, right? There's an itch to go spend. There's an itch to park it somewhere to get it done and over with. So I had that mentality for a while there, and it's as Vince will be able to tell you, it's real estate market, even the stock market, it's all about timing, right? So it's just like collecting yourself, and once you do have like that initial down payment, once you have that initial first installment, that you spend it wisely, right? So I see a lot of people not building as quickly as they could have because they've made rash emotional decisions in their investing journey, right? So for example, when you do see property prices down, it may not necessarily be a good buy, right? Property prices, for example, as of right now, the property prices are on a slow decline, especially in the condo market here in the GTA, right? So a lot of people that do have cash are feeling the itch right now. They want to get in because it's at a cheaper price and whatnot. But what they need to remember is that, supply over the next couple of years is going to exceed the demand, right? Yeah. But you're seeing something that's in front of you right now that's 20-30% off, right? Downtown apartment units, especially the smaller ones like a studio. So it's really important to be patient with your money and to take a step back and think about like where are you at overall in terms of the economy, because people that do make the money are the people that get to ride the wave upwards and then try semi-anticipate like the downward trends and whatnot. But here's the thing about property. If you're in it for the long run, overall, of course, over time, you're going to be in a net positive, right? Yeah. But, you start running into problems when you're squeezing yourself so tightly that, your expectations of making 20, 30, 40, 50,000 over the next 2 years just by flipping a place, right, again, as I said earlier on the podcast, doesn't hold true anymore. So, that's that part there. So what I wish I knew earlier was, diversify, right? Like not only think about real estate. Right. Again, it goes back to the timing question, right? There are certain points in, a 20-year cycle or like a 10-year cycle where stocks outperform real estate. There's certain times where real estate on average outperforms stocks. Right. So it's really important to understand where you're at in a certain point of time. Once you have that money, be patient with it, be very strategic with it, If you're in the investing game, it's all about ROI, 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 right? And I'm not advocating property is the be all end all, the best way to go, but again, my gist is that understand where you're at right now and understand what gives you a better ROI. Be emotionless about it, dollar for dollar. What's your biggest return? Because at the end of the day, it's all about like having that peace of mind. It's about having that security in your bank account, right? So,
100%.
yeah,
No, a lot of good tips there.
yeah,
And,
yeah,
it would make
yeah.
a fine point about investing now compared to back in the day when people could flip homes and get a return on their investment. Nowadays, it's more geared towards people wanting to live in the homes, not just to flip it. And I think uh, definitely true about the supply. We're going to have a lot more supply coming up. And so people thinking that, we're going to go back to 2022, that may
Big
probably
no-no.
not be the case. So some really good tips there. And finally, just wanted to close off by asking some rapid, quick questions, and really just to know what's the biggest red flag in any deal that you've experienced.
Yeah, so red flags come from obviously years of experience in purchasing property and selling property. So, just a few things. In general, if it sounds too good to be true, then it is too good to be true, right? So, it's really important. Number one, I was mentioning earlier in this podcast, it's really important to understand fully the reasons why you're going into this, right? So, there are some families that want to get a property that they're going to be living in until they retire, right? So the mindset is different. The mindset is, okay, I'm going to hold this for like the next 30 years. I'm in my 20s right now, right? I'm going to buy like a townhouse or apartment townhouse, condo townhouse. I'm going to be living there frugally for the next 30 years and until I retire. That mindset is different if you're like trying to, a lot of younger people here in the GTA, they keep on telling me like, hey, I want to get into a starter home, and then I want to get into, a apartment townhouse, condo townhouse, and I want to get up to a bigger townhouse, then eventually a house, and that is going to put a lot of stress on your life. You don't want that, right? So, in this day and age, like, how much are we making like a year? Like we're older guys, right? We're making over 100 G's a year, right? Like plus our wives, 150, 200 G's. That's like middle class right now, right? So, middle class income, living in let's say a townhouse or a townhouse condo may cost you 1 million, 1.2 million. That will every month when you're spending, when we go back to the topic of cash flow, right? So, how much cash do you want to sacrifice per month, and what kind of lifestyle do you want, right?
Yeah.
So,
Those $1 million project, typically it's
yeah,
like freeholds,
yeah,
and there are like
yeah.
condo townhouses, which is definitely the lower brackets. So
Exactly, exactly, and some of the biggest red flags I see is younger people they're biting off more than they can chew.
100%.
Right, because like maybe parents are giving you advice, like, hey man, like man up, or like just go for the, because you don't want to be switching and things like that. I would say like especially in today's market, it's very stagnant, especially in the condo market. Like I would be very rigorous and aware of like understanding my own reasoning as to why I'm investing.
The next question I had for you, Fred, is what's the one piece of advice you'd give to your younger self before your very first deal, let's say?
Yeah, I would say like if I was going to give some advice to my younger self, it would be diversify.
Yeah.
I have lost money. I'm not like a real estate guru or anything. I have lost money in real estate. In my 30s, late 20s. It's always great to buy below your means and then have another part of your cash flow going to like GICs, going into like mutual funds, so whatever it is, apart from real estate, right? So, because at the end of the day, like we're dealing with risk, right? When you're buying property, like some people want to buy a piece of property just to live in it. They don't care about the price. They don't care about like how much it's gonna increase, evaluate, right, and things like that. There are a lot of people that want to invest in real estate that do want to make that return. However, if the market, as in the cycle right now, if it's going down, then you also want something on the side where, it's, like again, I said, it's not the real estate's not the be all end all. I would tell my younger self is don't be too focused on real estate. Try to diversify your portfolio. Make sure you have a 6 months worth of salary, rainy day fund, and just in case you get laid off and things like that. And also, I would say like if you're gonna have kids, have them earlier.
Oh, interesting.
Yeah. Energy versus like once you get into your 40s, like you don't have that much energy.
What do you say to those families who kind of feel they're putting off having kids because of their financial situation?
Don't and your kids don't care about where you live, how big your house is. The only thing that does matter is like if you are older and you're having kids, your energy levels are just a lot lower. We're all running on a biological clock, right? So that's one thing that holds true through with anyone. It's really important, like if you do decide to have children, is to have it early, just because you have that energy. Number two is that once you start living in an area, you get started on a routine. Your kid's going to swimming, going to school, he's going to have their friends. So in general, your life is going to be more family oriented. And then I'm not sure, for me it did affect my mindset as well. When I didn't have a kid, I was more into more risky investment, right? Higher return, riskier investment. But since I have a family now, like you try to keep that rainy day fund there. You try to keep a cushion there, just in case if all hell breaks loose, then you got something in the bank, right? So
awesome. And let's say you're currently in the market today. What do you see yourself doing if you had the money now, like with enough for a sizable down payment? Do you have anything you would do with it if you had the opportunity? Or
yeah, I would invest more into like developing countries right now, right? Over the last 5 years, 6 years, our world economy is shuffling, right? You have the wars going on in Ukraine. You have the situation in the United States right now. You have that reordering of the global order, right? So a lot of things that have held true over the last 30, 40 years, what your parents have gone through, are a little bit different from what we're facing today. So me personally, I'm looking in real estate opportunities in developing countries such as Thailand, Malaysia, Singapore, not Singapore, but Indonesia, places like that. Because I do have a family now, because I'm at a certain point in my life where I'm looking for my retirement, right? So where's the best bang for the buck? Like if we're discounting education, if we're discounting, healthcare, Southeast Asia is really developing right now.
okay.
But where do I get the most value for my money in terms of like lifestyle versus the amount of cash flow? Again, we're going back to that cash flow topic. How much am I spending every month for certain things? So for me, like the Canadian real estate market right now, it's public knowledge. The condo market is pretty much very stagnant right now. Over the pandemic, there were a lot of people that purchased pre-construction. 2021, the tail end of 2021, early 2022. Today is 2025, so a lot of those projects are being completed right now. You see in the real estate market right now, a lot of people not being able to close, right? So, it's for me, having that understanding of the market and like, just me personally feeling like where the market's going to be going. I wouldn't, especially right now with condos, I would stay away from condos right now. Again, just going back earlier into the podcast, we were talking about like the oversupply that's coming. So vis-a-vis 2021, 2022, a lot of individuals did put down a down payment for a pre-construction, right? So we're expected to have like hundreds and thousands of new units coming in as we move in, late into the summer, moving into the fall. Another point I do want to add is, especially right now, the Liberal government is still keeping immigration levels extremely low. So over the last 6 years, real estate has been driven a lot by immigration, right? So a lot of newcomers coming into Canada. which, by the way, I personally welcome. That's what makes it strong. We're a melting pot in the world. But unfortunately, they have cut the immigration levels coming into Canada. So that is going to adversely affect, especially smaller units where, the mentality, 2, 3, 4 years ago was like, I'm going to, have like a 1 bedroom, 1 den. It's going to, flip easily. It's going to rent out easily. That's not the case anymore. We see a lot of inventory right now. I think there's a latest report that came out from LePage was that there was almost a year of inventory right now in terms of the condo market. So if you are looking to purchase right now, if you are looking to buy something, I would seriously consider something. The interest rates right now are pretty nominal, right? It's not going to go back to the COVID levels of 2%, 2.5%. Right now, your expectation should be 3.5% to 4% in terms of interest rates. So, me personally, I still feel that the interest rates are very favorable right now. If you're going to be living in a situation, with your family, if you're purchasing this property for yourself, it's very favorable right now. But in terms of investing right now, it's again, it goes back to supply and demand, right? So if you are looking for investment right now, I would go into the larger categories like your townhouses, your detached or semi-detached right now. Those are not building at the rate of condos right now, right? So but again, like if you're up for the risk, and if one house becomes 3 condos, then that's a risk appetite that you have to entertain, right? Of course, the larger the risk, the larger the return in the future, right? So it depends on your risk level. It depends on where you're at in your life. It depends on what you're purchasing this property for, right? Okay.
My last final question is, if you could pick a dream location for a vacation home, where would that be?
Oh, for sure. Like Koh Samui, Thailand, Penang, the second, third tier cities in Malaysia, Indonesia, things like that. You can actually get like a mansion out there for like $300,000. Like, and then, imagine like if you sell like your semi-detached, if you sell your townhouse here, you're going to be liquid like $1 million minimum Canadian. You're spending 300,000 on your property, and then you have like 700,000. Maybe you park away 400,000 into a GIC. You're living off the interest. You get a driver. You have like a housekeeper. You get a chef, right? International school. Sky's the limit.
Definitely things we can't get here in Canada, unfortunately. Well, want to thank you, Fred, for our very first podcast.
My pleasure. Thank you for having me.
Yeah, got a lot of good details about kind of the differences between the markets. And stay tuned for our next chapter. We're going to have more of these type of conversations upcoming in the next episodes. Until then, hope you guys have a great week. Talk to you guys on the next one. Cheers.